Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're looking at British hospitality stocks and my guest is Russ Mould, Investment Director for AJ Bell. Britain let its hair down this month. The celebrations that followed the coronation of King Charles and Queen Camilla, a perfect invitation for their subjects to scoff and quaff. For beer alone, 17 million extra pints were expected to be poured around the country over the three-day weekend. As for the bill, well, Brits may have spent an estimated £8 billion over the holiday, almost double a typical holiday weekend, with much of that on food and drink to take home and more again spent in pubs, bars and restaurants. All a welcome relief, no doubt, for a hospitality sector almost brought to its knees during COVID and which is still battling a cost of living crisis amid sky-high food and fuel costs. Though the sector has been putting up a good fight. Over 5 years, UK travel and leisure stocks on the FTSE 350 are down by well over 20%. Taken over the last year, they've rebounded by nearly 17% as demand continues to recover. Well, I'm now joined by AJ Bell Investment Director Russ Mould. Russ, thank you so much for being with us today. As we heard there, UK consumers have been having a miserable time. How much have they been needing something like a coronation weekend to give them a lift, and how much has the sector needed that?
I think everybody likes a good knees up, don't they? So any excuse is always a welcome excuse, and it will have brought some cheer to a sector that really has had a very tough period of time. In the end, an 8 billion spend up is great. We are a 2.2 trillion economy, so we need to keep the overall benefit in perspective. But for the sector, very helpful, thank you very much.
Now, inflation, a particularly thorny and sticky problem, but Sainsbury's today, as we make this programme, in fact, cut the price of bread and butter. That's being welcomed as a sign that inflation may be on the downturn. Do you agree with that?
Best cure for high prices is high prices, because in the end, the buyer will buy less, cut back. Now, I know with food, that's a really difficult thing to do, but people may then trade down through different brands. So there are still options available to them if times are very tight, which we know for a lot of people they are. So that sort of thing will definitely help. The Bank of England will be watching it very closely. The best thing that can happen for us overall on inflation is if the oil and gas prices stay capped where they are or come under pressure, because that filters through to so many different things, whether it's packaging or fertilisers. But it's the sort of thing that, yes, will be very, very welcome for consumers, and also probably, from a corporate point of view, help to deflect any accusations of profiteering through price increases, which has been a big debate that there's been.
Let's look at some of the players in this sector. Drinks maker Fever Tree and pub operator Fuller's, obviously standing to benefit from the coronation, but more widely, how do they stand in this marketplace?
I mean, Fever Tree is finding it difficult to maintain the very, very strong growth rate that it's generated when it was gobbling up market share from some of its key rivals, but it's clearly still a very cherished brand, and it's the brands that you need that bring pricing power. So if you do have some input cost inflation, whether it's glass or freight or shipping, or I suppose juniper in their case even, then you will be needing the ability to pass that on, and Fever Tree's brand probably brings them that. Fuller Smith & Turner is probably more of a sort of opening up of the economy post-COVID. A lot of its pubs are in the southeast, in the city of London even, where we now know that, certainly from my commute at least, the number of workers coming back to the office is increasing fairly consistently, and that will be of great benefit to them.
Since COVID, one of the standout performers has been hotel and restaurant operator Whitbread. Have they a secret that others haven't yet discovered?
I think one thing they did really cleverly was when we were going into COVID and we were just in the first lockdown, they did a big fundraising and they strengthened their balance sheet incredibly quickly. And that left them in a very good position to A, weather the storm, and B, then come out of it on the front foot, able to roll out more hotels, refurbish existing estate, and take share from small independents who maybe aren't quite so well funded, or even one or two big names whose estate doesn't look quite as sharp as the Whitbread one does for Premier Inn, and I think that's been their big secret.
Another standout performer on UK indexes has been Marks & Spencer's, and of course its battle to restructure and refresh its image has been one of the biggest stories on the UK high street for many, many years. Has that battle been won?
It's going better than it was. It's now a FTSE 250 stock, so it did drop out of the headline index a couple of years ago. But if you look at food, that's been relatively consistent performer. And I'm sure they sold a lot of coronation chicken sandwiches over the weekend. But the real secret there has been the clothing business and the household business that did have a torrid time. There's a new team in there. Some of them are ex-Arcadia from Sir Philip Green's fallen Topshop empire. And they're actually doing a tremendous job with the women's ranges in particular. So there are some signs of life there after a very long time.
And how do you see the sector going forward? Food inflation is up, 20% or so over the last year. UK growth is stagnant. Is that a good recipe for this sector?
In theory, no. I guess all you can say is the good news is the share prices took a big hammering in 2022, so expectations were low and are still relatively low. Consumer confidence is still very depressed if you look at the GfK data. And in the end, inflation is still running above wage growth. So the best thing that could happen is, yes, a cooling in inflation. Oil and gas prices coming down, taking pressure off at the pumps, taking pressure off energy bills. They will be huge steps forward for the sector.
OK, Russ Mould, Investment Director at AJ Bell. Many thanks for those insights. And that is your look at investing in UK hospitality stocks. I'm David Pollard, and this is Reuters.